Hello, Paul. How are you?
Yeah, I'm very well, thank you. Very well. Thought I was on my own there.
Yes. It's just some technical issue with the social media today. I don't know what's happening here, but these things can happen. Just let me, if I can share the screen. Can you see my screen now?
I can, yes.
Okay, awesome. So just give me a couple of minutes for the introduction and then we are ready to go. So ladies and gentlemen, Paul, myself, and Admirals, we all like to welcome you to this webinar. As always, it's a pleasure and privilege and honor to have Paul here because it looks like in price action, it's one of the best out there to put the information in front of you. So could there be someone better to help you with your education and trading curve? So please make sure you have the Instagram page in your following pages. I will share it with you right now. And also the Admirals channel. We put many valuable content in both of the pages. For a reason I cannot share the YouTube, it doesn't allow it doesn't just not allow me, it doesn't just loading to go to our YouTube channel. So if you kindly, Paul, try and see if you can go to the YouTube to share the link. And I think, Raquel, hello. Raquel attends the webinars every day, and not only Raquel, but many other people. But Raquel is brave enough, I think, to just say hi. Peter is here as well, many names that I personally recognize. Welcome, everyone. So, Paul, for me, I think it's fine.
Excellent. Super. I will, if you're happy, I'll bring up my slides for today's session. That's brilliant. Excellent. Hopefully hopefully everybody can hear me, and hopefully everybody can see those slides.
Yes.
And great. If you're happy, I'll take over and we'll crack on. All right.
Sure. Thank you so much, Paul.
Super. Thank you for the introduction, Theo. Thank you everyone for joining us. And here we are, ladies and gentlemen. Today we're going to talk about price action again. It's price action Wednesday. I know last week we're on a Friday, but you know, we're back to Wednesday afternoons. Okay, 2 o'clock London time. And we're going to be in session 22 today, which is talking about combining commodities and price action, and both interesting topics of their own. But what I wanted to do is just sort of, you know, give people a bit of an introduction to commodities, a little bit of an understanding of what's available to trade through the Admirals products, and also just chat about how price action plays out in commodities, just to sort of give it a little bit of a different flavor from some of the normal sort of products that we would look to focus on during our particular sessions. So, you know, remember, here we are, you know, we Admirals here, okay, a Forex and CFD broker, global presence and local support, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products and giving the opportunity to engage with markets using both the MT4 or MT5 platform. If you have any questions about Admirals, please get in touch with your account representative and they'll be very happy to help guide you. So what we'll talk about today, not unsurprisingly, as always, you know, it's great to see people here who, you know, join us every week for the price action series, but I also recognize there'll be people either joining us today or watching this later on demand on the Admirals YouTube channel who may be completely new to their trading journey, completely new to price action. So we'll, as always, just do a little quick slide to remind people of what that's about. And then we'll talk a little bit about what are commodities markets, okay? And in particular, you know, which ones are available with Admirals, okay? Which ones can you actually trade? And then we'll look at, well, how can we trade them using price action? What are the sort of things, you know, I've been looking at and what are the sort of things I've been watching and trading over the last couple of weeks? And we'll combine that with a look at the live markets as always. So as always, plenty for us to chat about, plenty for us to talk about. And would be interesting to hear from those of you joining us here today. how many of you actively trade commodities markets at the moment? And if you do, do you have a particular favorites? And if so, why? Okay, or what has been your experience of commodities markets? Maybe it's completely new to you. Maybe you're aware of it, but have just, not really sort of taken a bit of a look at them. It's absolutely fine, okay? It's just be interesting to know what your own experience has been, if any, that you've had from the, in commodities markets, okay, and particularly trading them. So if you want to, put any of those comments or thoughts in the chat box, that's always great. As always, if you have questions, we'll happily take them. Or if you're watching this later on demand, you can either put it in the comments or just drop us a note at the email address, which will be at the end of the session. There'll also be a quick feedback form that will probably get sent to you after this. Be great, if you give us any ideas or thoughts, what you think about the session, or any particular ideas of stuff you'd like to see us cover in the future. Okay, we generally do take that on board. We do try to make these sessions as insightful and as helpful as possible. And so if there are particular topics that you would like a bit of help with, by all means, put it in that feedback form, and we'll be happy to take that on board and build it into our future session plans. So for those of you who don't know me, my name is Paul. I've traded for many years now, okay? Traded for funds, traded for clients. Primarily, I like to focus on FX indices and commodities as well, okay? And in particular, some types of commodities and in particular, particular setups and timeframes, which I will share my own experiences, okay, with you today. Generally, longer term trading, I tend to be generally focused more on trading trends, and on the shorter aggressive intraday trading, that's when I tend to be a reversal trader, right? But regardless of whether you are an intraday trader or swing or position trader, all of those we will talk a little bit about in terms of commodities during our session today. So, we're continuing this session on price action, and the reason being is that very often new traders can be a little bit intimidated by the amount of knowledge required, but also the amount of knowledge that is out there. Even just on Admirals website, there is absolutely abundance of educational information, and then if you go broader into the internet, there is just a huge amount, and it's very easy for new traders to perhaps be a little bit intimidated by the amount of knowledge is out there and what's required to be able to trade and analyze markets. And what we're trying to do is, in price action, sort of strip it away a little bit, so that with just a little bit of education and understanding of how candlesticks are formed, how price action plays out, it becomes easier for you to analyze and to also understand markets. So each Wednesday, we're trying to build on each session so that you're educated and informed on how to use price action in your own trading. Okay, and each session, each week, just build up just a little bit more and more. Roman says, hello, you're very welcome here. Great to see you. Great to see so many of you here, okay, and you were, as always, very welcome. We appreciate that, here at Admirals, that these are the English-speaking webinars, but we realise we have a truly global audience. So wherever you're joining us from in the world, you're very welcome. Hope you're having a great year. Hope you're enjoying these rather eventful markets that we find ourselves in 2023. And, regardless of whether you've been trading for 2 days or 2 decades, you're always very welcome. There's always something to learn, to take away from these sessions. And as I said, you're welcome to have questions. So for those of you who are complete beginners, and they might be thinking, well, what on earth is price action trading? It is just a very basic means of analyzing markets using the movement of price over time. And, it is popular with both retail and institutional traders. There's lots of eyes on charts, okay, utilizing that as ways and means to make their trading decisions. Typically, what we will focus on is in this series on the price action over maybe the last 3 to 6 months, right? And the reason for that is we recognize that a lot of people joining us for our sessions or on their trading journey are probably trading around other commitments. So, you might have a job, you might have family, you might be running businesses, okay, you might be caring for family, etc. And so, you're probably doing a little bit of trading at weekends or in the mornings and the evenings around your other existing commitments. And that's absolutely fine. There's lots of people who are working that way. And so maybe looking at sort of kind of a little bit of a longer term ideas, and that might be of what is of benefit and use to people in terms of how they integrate and execute price action trading. So we have covered an awful lot in our series, okay? And you can see there what we've covered so far. And as I say every week, what I've been trying to do is basically alternate a little bit between some of the hard skills. So the hard skills, okay, you know, people would see like, you know, things like setups, okay, how you trade. And there's plenty of those sessions there. So on things like engulfing candles, star formations, pin bars, inside bars, key reversals, false breakouts, etc. All things like that, which are perhaps maybe seen as the hard skills of trading. And the great thing about this series is it is all on the Admirals YouTube channel. So if you've missed a piece, or if you feel you need to go back through a piece, please go through that again. You'll find it all there available to look at. But also we've done some of the soft skills, which new traders don't always recognize the importance of until you've got some trading experience under your belt, and you realize things like preparing for opportunity in the markets, building a trading plan, how to develop routines, how to review your trading, okay, grading your trades. These are all things that at the start of your trading journey, you might be thinking, well, you know, why do I need to do that? What relevance is that? But I assure you, the longer you trade, those soft skills are what will support the hard skills. And when you've got a good basis of both, that puts you in the best place to be able to engage with markets at the best way that you can do. And so today we're going to, as I said, we're going to look about commodities and price action, all right, and you know, and how they you know, complement each other, how they can work together, okay, to help us with our particular trading. And as always, a very quick reminder, we talked about having 10 steps that we would always follow, and you'll see parts of this today. But, you know, the first 5 steps of that are very simple price action, you know, analysis steps that we want you to do. And the idea is, as we talked about in one of the earlier sessions, is about we want you to be able to build routines. So what I tell people is, you know, whenever you open a chart, okay, it doesn't matter what it is, all right, whether it's Bitcoin, whether it's gold, okay, whether it's bonds, whether it is the Dow, it doesn't matter what it is. First steps, okay, draw in, define the levels of support and resistance that you will find on that chart, okay, draw in horizontal levels of support and resistance, look at where markets are consistently touched or, you know, bounced through. Because markets, remember that, do it on the monthly, go down to the weekly, down to the daily, all right, so you start to build a picture of some of those particular interesting levels of support resistance. Step 2 is, you know, define, is there a trend? Okay, is there a trend in this instrument? And as I say every week, good trends leap off the chart at you. You don't need to force it. If you feel you need to force it, it probably isn't a trend. Okay, keep it simple, keep it easy. Step 3 is, well, what we're looking to do is we're looking to see how does price react at those particular key support and resistance levels. Those support and resistance levels, they might be the horizontal support and resistance levels that you've drawn in. They might be big round psychological numbers. They might well be dynamic support resistance levels, which are provided by moving averages. Okay, and you'll see I always have a couple on mine, the 20, the 50, and the 200 to begin with. Because what we're looking to do is, if there is a trend, what we want to be doing is we want to be looking to sort of be a buyer at support. And if in a downtrend, we want to be looking to be a seller at resistance. And what we're looking for is when we see those areas where the market's going to make a decision, it's going to, there's an inflection point there. We're looking to see, does it have any particular price action triggers? Some of those hard skill sessions we've talked about there, things like pin bars, engulfing candles, inside bars, key reversal formations, star formations, false breakouts. All right, you know, they're all good setups, but they become more useful to you when you're following these steps so that, you know, you're doing it at the right time and place. It's all about context and confluence of events. And don't forget, is it actually part of a bigger chart pattern? You might be seeing a nice pin bar bounce off a moving average, okay, in an uptrend, but it could actually be part of a bigger chart pattern, something like maybe a bull flag, and that in itself, okay, is worth drawing in because that in itself is a tradable pattern in itself. So remember, we always want to be doing those 5 steps. And what we also talked about is, you know, looking at, can have quite a broad range of instruments to begin with. So normally look at the dollar index, which we'll also talk a little bit about today, and then about 28 of the major currencies, okay, and the crosses between the major currencies, looking at the major equity indices of the world, okay, the S&P 500, the Dow, the Nasdaq in the US, things like FTSE in the UK, DAX in Germany, Nikkei in Japan, the ASX and stuff in Australia. But also commodities, which is what we're going to talk about, things like oil, both Brent and West Texas, gold, silver, palladium, natural gas, and platinum, more of which later. Some people like to look at also at the big American tech equities. Why? Because they're very great volume, okay, very liquid, and they move, okay. They have that volatility that provides traders with opportunities. And I also recognize that, we also have some traders who love to trade crypto. So things like Bitcoin, Ethereum, okay, Ripple, etc., and a whole host of others. So, when in terms of price action, we can utilize that, okay, across that broad spectrum of asset classes and instruments. But as we'll talk a little bit about today, that can also be focused, okay. There's nothing that says you have to trade every single one of those, but it can be a starting point to give you an idea of understanding of what's going on in markets. And then what will happen is you will probably focus down to probably around about half a dozen, okay, about half a dozen instruments which resonate with you. Okay, they may suit your particular lifestyle, may suit your particular risk profile, your particular sort of trading beliefs, and that's absolutely fine, okay. But we'll start somewhere and then we basically hone in and focus as we go. So, commodities and price action. So, what we can often see is that, many new traders are happy to focus on trading FX markets or just equity indices, both of which are fine asset classes to trade. It's where most of my trading goes on, okay, in FX markets and equity indices. They're absolutely, fabulous asset classes to trade. However, I do recognize that there are other asset classes available. Might be things like crypto, might be things like fixed income, but there are also, one of them is being commodities. So when it comes to traders, sometimes I'll find that new traders, they might be aware of some of the popular commodities, things like gold and oil. However, there are more commodities out there, and there are, several of them are available to Admirals clients to trade. So what I thought today we'd look at is we'll have a little look at commodities markets. We'll have a little look at some of the instruments that Admirals provide, but also what I'll do is I'll share with you one or two sort of, let's say a little bit of insights, a little bit of things, your heads up you can look for to help you understand commodities markets a little better and trade them. And then what we'll do is we'll switch across to the Admirals platform and have a look at them on there. And I'll give you a little bit of insight into utilizing price action with commodities markets. So as I said, there's lots for us to cover, lots for us to go through. So, as I said, it'd be interesting to know what, if any, experience people here today have of trading commodities, okay? Maybe you traded oil, maybe you traded gold, okay? Maybe, because as I said, they tend to be very popular. There's a lot of coverage, but it'd be interesting to know what, if any, experience, you have of trading commodities. Perhaps you have none, and that's absolutely fine. That's why these sessions are here, to help, sort of, educate you and give you exposure to what other opportunities lie for you. But when we come to commodities, and we could talk about commodities and the individual commodities massively, okay, for weeks on end. But as a very let's say as a very brief introduction today, generally commodities we can sort of start to classify them into two groups: soft commodities, hard commodities. Soft commodities, okay, tend to be agricultural based commodities, okay, because they tend to be soft. Fancy that. So as you can see there's things like soybeans, wheat, cotton, sugar, orange juice, etc. It can also mean livestock, all right? So cattle, lean hogs, pork bellies, feeder cattle. Those are the soft commodities. So if, like me, you grew up spending time on a farm, that would actually be quite, you'd be quite comfortable with that, and you'd actually probably have a little bit of an understanding of commodities markets and how farmers themselves would use things like futures and options to be able to help them manage their own business. On the flip side, excuse me there. On the flip side, there are hard commodities, okay? Hard commodities because they generally have to be dug out of the earth as a general rule of thumb. So in terms of energy, okay, you've got things like crude oil, natural gas, heating oil, gasoline, or metals, gold, silver, copper, platinum, and palladium. So as I said, they're hard commodities because invariably, they need to be dug out of the ground, okay? They're hard to get at. So those are the kind of two general sort of, groups that we could do. I mean, they can break them down even further, but as a general rule, just being able to understand that, soft commodities and hard commodities, and invariably what they actually, what actually makes up to them. So David says he's had experience with trading sugar, coffee, cocoa, hogs, etc. So, he's got a lot of experience there of trading commodities. That's fantastic. There were some people who particularly specialize in just trading commodities. There are commodities houses, and in particular trading houses that focus just on trading commodities and just having their specializations within there. It's, as I said, I have a little bit of experience from that sort of the farming side, but actually the farming side and the trading side, they're very, very different. They are, but it gives you an interest and an insight into some of the elements that are relevant that a trader would be thinking about. And what you'll find is that there is a plethora of fantastic information out there on the internet, should you wish to go into these individual commodities in a great deal more, actually. And there's fantastic pieces of information that you can watch and you can read about, okay, that will give you a bit of insight into some of the peculiarities or the specialties, okay, or what is worth noting about some of the particular commodities. So definitely things like, in terms of the agricultural commodities and livestock commodities, things like the harvesting times, okay, and etc. The impact that that will have upon the price of that commodity, okay, and that can be very useful information for you if you're going to focus on trading commodities. And not unsurprisingly, things like, for stuff like energy, well, those of us in Europe have seen, over the last year, okay, how the effect of, the sort of conflict in sort of over towards Eastern Europe, the impact that has had upon, energy prices, okay? So, they are all very sensitive to, let's say, geopolitical considerations. There's a huge amount you can read and learn about it. Okay, it was probably we don't have enough time for that here today, but what we're interested to do is just to really look at, how do we as traders and those using price action, what do we need to be aware of? How can we actually sort of, how can we relate to that? So Raquel says, I tried a few of them before, but keep away from them in order to gain more understanding about these markets. And that's absolutely fine, Raquel. That's absolutely understandable, Raquel. There's an awful lot of opportunity out there, okay? Admirals providing a wide range of instruments to trade, and it's an element of, as you grow in experience and understanding, that is when perhaps, you might wish to sort of learn about different asset classes, different trading opportunities. So, fair play to you on that. So when it comes to what you're able to trade with Admirals, Admirals provide, they do offer some introduction or, and exposure to commodities. So some of the popular ones, so things like gold, silver, oil. And in terms of oil, they have both Brent, West Texas, and also a difference between crude oil and West Texas being one of them is a futures contract, one of them is the spot contract. And they also have natural gas and gas there. And I'll show you where you can find them on the MetaTrader platform when we switch across. As I said, they have their idiosyncrasies, okay, in the way they operate. But ultimately, being able to understand good price action is a bonus for whatever particular asset class you look to focus on trading. If also, you wish to have a greater exposure, or perhaps you're maybe not necessarily, comfortable trading commodities, it's also being aware of that. With Admirals, okay, you can actually trade some of the companies that are directly related to commodities markets, a couple of the energy markets, etc. Okay, which we will look at later. I'll share with you one or two that might just be worth taking a look at, which might actually be a trading opportunity or maybe even an investing opportunity if you have a particular theme or interest in terms of how commodities markets actually move. But more of that later. What's important to note is that for those of you completely new to trading, completely new to your trading journey, is the relevance and the importance of the US dollar when it comes to commodities markets and the impact that it will have on it. As the slide says there, the US dollar remains the reserve currency of the world, based on the largest economy in the world, the US. Okay, and whilst there are always conversations about that, I don't see that particularly changing anytime soon. Okay, lots of people will talk about how there might be, China might overtake that. That is possible, but I don't think that's not happening anytime soon. Okay, and so understanding the US economy and in particular understanding the US dollar, is hugely important, because the vast majority of commodities are priced in US dollar in terms of both soft and hard commodities. So what you'll find is that all countries will need to hold US dollar in order to facilitate commodities purchases and other global trades. And in the FX world, okay, over 50% of FX trades involve the US dollar in one form or another. And as it says, therefore, the US dollar is keenly watched to see what, if any, impact it will have just on overall markets, but also specifically, you'll see that with commodities markets. Okay, so remember, it's important to note that, right? You are effectively, you are trading, you're buying, whether it be gold, whether it be oil, okay, whether it be platinum, all right, it is also a reflection of it against the US dollar. And so understanding, what the US dollar is doing, okay, and how how the changes in that and the volatility in that can have an impact, on some of those commodity prices is crucial. So if you are going to trade commodities, you also need to keep on top of the US dollar. And I will show, as we switch across to the charts, what I'll do is I'll show, just a little bit of a recent trading, okay, where we have seen the kind of, the impact between US dollar, but also the impact that has had on gold and silver and how that actually provide trading opportunities. Just being aware of that and utilizing some of the simple price action that we have talked about here in these particular previous sessions. So there's plenty of commodities for you to look at when with Admirals, but equally also, it is, as I said, it's important to keep an eye on an understanding of the US dollar, and we can do that utilizing the dollar index chart, okay, which you have available to dollar index chart, Dixie, okay. It is it's the US dollar, against a basket of its major trading currencies. I think it's about 57% of it is made up of the euro, but then pretty much, yen, sterling, okay, Japanese yen, Aussie, Kiwi, okay, some of these Scandinavians, etc. They're all in there, and that provides that basket, okay, against trading against the dollar, and it gives you an insight into, whether the dollar is strong, whether it's weak, whether it's trending, okay, whether it's volatile, whether it's, sleeping and consolidating, which is useful information to know, okay, as you look to trade commodities. So with that as well, I thought, before we switch across the charts, okay, I thought I'd also just give you just a little bit of insight in terms of commodities and a couple of things that can help you in terms of building that picture, building that bigger picture of what's going on in the commodities space and things that you might just want to take on board. This is a chart which is, it's not a chart presently available on Admirals, but it is, you'll be able to access to it on the internet. Very often it will just call the sort of the CRB, okay? It's created by Thomson Reuters. CRB index, it's like the commodity index in the same way that you might have a dollar index, okay? This is a commodity index giving a little bit of an insight into the overall commodity market space. This is here on a weekly chart, and as I said, one of the things is just useful to help build your picture about understanding what is going on in that space. And now, as I said, this is the weekly chart, and what we had here, this was the sort of COVID crash of a couple of years ago. When we saw the lows there, and we were down, down here, getting sort of touching the soft underbelly of the big round number of 100. But you can see realistically that what we had was invariably for a couple of years there, we had just a fabulous trend in CRB, but also in commodities in general, okay, various different commodities at various different times. Some of that was also just basically done equally with the weakness of the US dollar. The US dollar was very weak. That was basically had an impact on the overall commodities markets. What we have seen over, what we saw over a lot of the last year was invariably we saw strength in the US dollar, okay, some real strength in the US dollar. And with that in mind, we saw, weakness across some asset classes, some instruments, and also it had an impact on commodities as well, even though we'd had sort of the, let's say some of the shocks based upon, the conflict going on in Ukraine as well, and the impact that had on both energy markets, but also some of the soft commodities, Ukraine being one of the wheat baskets of the world, okay, and that having an impact on that, an impact on wheat itself. So as I said, the CRB index, okay, is a chart. So, if you're looking at commodities, is always, an interesting one to look at, to just, as I said, give you a bit of a big picture about what's going on. You can see there at the moment, to me, that is actually, if you're looking at very simple classical technical analysis, that is looking like it's a descending triangle at the end of an uptrend, which is unusual, but it is there, and you can see that there is a level of support there that people are will be watching to be interested to see if that breaks and we start to see a drop in prices of certain commodities. Okay, so as I said, CRB index is worth having a look at and keeping an eye on that. A couple of the other ones, okay, that are interesting is that and I've just utilized this just to give us a move. I'm just going to move my little video here, the other side. Is two things. We talked about how the dollar index is of relevance and importance, okay, to commodities traders. And one of the other things that's elements that linked with it, okay, is also the chart of EEM, which is the fund, but basically looking at emerging markets economies. Okay, EEM. All right, so you can look at that. You can, it's not presently available on Admirals, but you'll be able to find it elsewhere on the internet. And as I said, this is just a weekly chart of it. But what I've also done is plotted the weekly chart. The orange line is the dollar index. Okay, the dollar index that we've talked about here. What we find is, a lot of those emerging market economies, okay, they are very closely linked with, they're basically, they're exporting their commodities, okay, whatever that might be, whatever that could be. And so invariably, because, the exports of commodities are important to them, that means the price of those commodities is important to them. The price of that can be influenced by, geopolitical tensions, but also what's going on with the US dollar. Furthermore, you'll find in some of those emerging market economies, what you'll find is, debt is stipulated in dollars. Okay, so if you're Argentina or other, let's say, other countries there in emerging markets, okay, who have overall, let's say, large debt to pay back to the IMF or World Bank or other external creditors, well, then invariably, the more expensive the dollar is, the more expensive your debt is, the more bigger impact that can have on domestic programs, etc. And all of these things can have an influence and an impact on the price of commodities and and the export price of commodities, which these emerging markets emerging markets are very sensitive to. So what you might be able to see is, once again, this is a weekly chart, and what we had is last year, okay, or last year or two, what we had there was, as we had dollar strength. Dollar strength coming on, well, invariably the emerging markets fund was invariably going down. Okay, there's an inverse correlation there. Okay, and if you were to look at this in a bit more depth, you could recognize and work out that particular correlation. But what we have seen over the last couple of weeks, we saw at the end of last year, start of this year, was basically we had a little bit of a bump in the emerging markets as the US dollar tailed off. But the last month, what we've seen is a little bit of a re-emergence, okay, of dollar strength, and we can see how the let's say the little pullback there on the emerging markets has drifted down back beneath the 50 period moving average. So, as I said, in terms of building big picture, this can be quite helpful to you. Just looking at, as I said, looking at the CRB index, looking at the dollar index, looking at the EM, okay, all together just help you build a picture of, where's the strength, where's the weakness, because you might be able to utilize that in understanding, okay, what's going on with some of those commodities markets. So I hope that's a little bit of maybe something you weren't aware of, something you could utilize, as I said, quite simply and easily in your overall analysis. What we do, okay, and what I am going to do, and we'll switch across now, is I also have a commodities profile on my MetaTrader platform, all right? So I'll just show you when we switch across, okay? We'll switch across to that. I have a commodities profile, very easy to set up. And not unsurprisingly, okay, it covers all of the commodities that you're able to trade through Admirals. So I have gold here, okay, I have silver, I have Brent, okay, oil, and West Texas there. I have platinum here, palladium, and then I have the natural gas, and then I have the dollar index. Okay, remember what I said, I want to keep an idea in the dollar index, and I can find that very useful, very helpful, very quickly. Even just even just looking here, okay, on that weekly chart there, okay, after the last month we've had strength in the dollar, has coincided with weakness, okay, in both gold and silver, which we'll look at in a live, we'll look at the live element in a moment and stuff. So, you know, it's very simple, very easy to set up a commodities profile there on the MetaTrader platform. You've got it there, and you can actually start to see the interaction of how commodities are moving and how they are moving in reflection of the US dollar as well and stuff, all of which is a kind of, as I said, it's all about helping you go about build that picture. So with that in mind, why don't we look at getting across and having a look at some price action on the commodities markets, okay, based on the MetaTrader platform. So just before we switch across to the charts, just remember, price action analysis, it's just a way of analyzing market moves using, you know, price over time. And in particular, we're looking for price action triggers at significant price levels, prices or zones, okay, as ways and plays that as triggers for us to be able to do our trading. And it allows us to build a very simple price action trading plan. We talked about trading plans in one of the earlier sessions, which is available on the YouTube channel. The CRB chart lets you track the demand for commodities, okay, being able to see that. And what we'll see is, you know, is despite the kind of proclaimed green revolution that we're going through, there is still demand for oil. Yes, oil prices may have dropped, you know, from what they were about a year or so ago, but there is still demand for oil, and that is still, you know, makes it a volatile and tradable product. And if you can't trade the direct commodity, or you choose not to, then you can trade some of the companies associated with commodities. Boom, and I'll show you that in my commodities profile in a moment, because it's worth setting up a commodities profile, regardless of whether you're using MT4 or MT5 platform with Admirals. You can set up a commodities profile, which just allows you very quickly to take a look at them and you know, and be able to trade and just also focus on a view of overall commodities. So before we switch across the charts, just remember, you know, our price action sessions are all about every Wednesday, 2 p.m. London time. So join us next Wednesday, 8th of March, for the next of the session. What we're going to be talking about is, you know, how to use targets or trailing stops with our trading. Okay. So we'll talk about what are targets, what are trailing stops, you know, what are their pros and cons between them, you know, why are they important, and how do we employ them when we're just utilizing price action trading. As I said, that's next Wednesday, 8th of March, 2 p.m. London time. You can sort of check your inbox for the webinar link or head over to the website and sign up to that. And as I said, if you've got any questions or comments or feedback, you know, we've got the global@admiralmarkets.com, okay, email address there that you can ping us on, okay, and that will, you know, we'll do that. And as I said, maybe you've got thoughts, maybe you've got comments, maybe there's things you'd like me to cover in future sessions. That's absolutely fine. By all means, feel free to put that down, and we'll be happy to take that on board. So just bear with me a minute, because we've got a good few minutes. I wanted to have that to be able to sort of just go and have a look at price action on commodities. And as I said, build in some of the elements that we've just talked about there during the slide. So if you just bear with me a moment, what we'll do is we will switch across to the platform and have a little look at the charts. Darshan says, great webinar as always, Source. That's very kind of you, Darshan, very kind. That's very kind. Thank you. So just bear with me a moment. Let's have a look at the chart, shall we? We're all traders. We always like having a look at the price of the markets and the charts, don't we? So let's see how we've got these set up here. So here we go. Have I got them all? Yeah, excellent. So hopefully you can still see me. Hopefully you can still hear me. Hopefully you can see the MetaTrader platform, the Admirals MetaTrader platform. As I said, what I've got here is I've just set up a commodities profile. And you know, if you're very new to trading, okay, or trying to understand, well, you know, what you can see is on the market watch. Let's just bring it down here. On the market watch, you know, you can scroll through and find the commodities available. They're normally a little bit different color. There's lots of different instruments you can trade, but in particular, you know, we're looking at the commodities here. So you'll see them in kind of a yellow gold color, and that is invariably what you see there is gold, silver, palladium, platinum. There's Brent. There's both spot, West Texas, and futures, and also natural gas. And you can just literally drag and drop them into your charts. And as I said, I have them here so that I've got a little bit of a very quick, if you know, just I can utilize it not only for trading, but just also for my big picture analysis of, commodities, so I can, sort of focus in on where and how I want to particularly trade. So, as I said, the first thing I want to always look at is just understand the impact of the dollar, and actually the dollar of the last few weeks, having had a big downtrend. Last few weeks, okay, we had a big, this is a bullish engulfing, bullish reversal candle we've had for the last, sort of month or so. We've had bullish strength, okay, bullish strength in the dollar. So I just ask you to remember that, because then what we looked at that is looking at particularly gold and silver, how the impact that had. So if we just bring up the gold chart here. So here's what I'm going to do. As always, as I said, when you're opening a chart, just start with, just move that over there. Start with the monthly chart. And what we're looking to do, as I said, start with the monthly and just draw in levels, okay? Levels where you see price reacts, okay? Maybe where there's invariably, you can see there's multiple moves and multiple touches, okay? And that's going back almost 13 years, okay, on that monthly chart. Now, some people like to trade the monthly chart. Many people won't, but it's a starting point to identify particular levels of support and resistance. Make sure you're drawing them in. Make sure you'll see that I actually have big solid red lines for what might be big round numbers like 2000 there, or significant numbers we see that price seems to react, and certainly with gold 1700, 1600, even actually probably 1800 as well. Those big round numbers, they tend to sort of have a relevance. And so then, once you've drawn it on the monthly, the good thing about MetaTrader platforms, once you've drawn in those levels, okay, you can see that it will stay there, go down to the weekly and be able to do it. And what you start to see is that, the price does, it recognizes and remembers significant levels. And that is why we want to draw them on. If you're trading shorter timeframes, the last thing you want to be doing is, you don't want to be buying into resistance. You don't want to be selling into support. You want to be aware of where those big levels are. That can actually help you, okay? And as I said, also, it's a recognition to effectively to where there are levels you might be focused on to want to do your business, okay? So it's a case that, and what we can see here, if I'm going down to the weekly chart, is let me just bring up the old drawing tool here. Gold is a good example at the moment, because what we saw last year, okay, is price came up to the 2000 level there, and what did it do? It printed this very big rejection candle pin bar at previous area where price had been rejected. And it did that, and then basically what it also set up was, it set up a bigger pattern, which was a double top pattern, which was also finished here with this. This is a bearish engulfing, bearish key reverse candle. They're all in those sessions. And what we could see was price just basically moved down very nicely, okay? Came back down to these areas of 1700 towards 1600, until what we did here is we put in a reversal pattern here, which is a triple bottom. And it finished that triple bottom, with a bullish key reversal, okay? Bullish key reversal, bullish engulfing, which was also around about the same time that the dollar strength, okay? We'd had all dollar strength all through the year, which meant gold weakness. We had dollar strength basically waned, and what we saw was basically a bit of gold strength. And then remember what I was saying is that for about the last month, we had a bullish reversal on the weekly chart, which was also accompanied here by this big bearish reversal on gold. And you see how, commodities will have their own prices, but they are hugely impacted, gold and silver and a few others, by what's going on in the dollar. So by understanding what's going on in the dollar, it gives you a better insight into what might be going on in those commodities, and that helps give you a little bit of edge in terms of making better trading choices. And that's actually what we're always looking to do. What can I do to make better trading choices? And if I just do that here, let's just move these down, okay? What we saw was that we saw price that daily on the daily chart, it had basically respected the 20-period moving average until it put in a daily double top with a daily bearish engulfing key reversal candle. And then basically what we saw was for most of February, pretty much for most of February, we saw that move. Now there's a little bit of a change. We had here on Monday, we had a bullish daily reversal. We'll see whether that can follow through. But what we saw here if we go into the 4-hour chart, and this is what starts to be interesting for me, is what was gold and silver and our trading opportunities was, once we'd recognized that was in a downtrend, okay, once we recognized in a downtrend, well then, what we can see was that actually, and it's even better on the silver chart, which we look at, is when price would pull back, okay, and it would finish with engulfing candles, or more interestingly, like last week where we had just reversal, we had a nice pin bar off that 50 period moving average, and price ran its way down until earlier this week it put in a double bottom there, resistance, and we've seen in the last day we've seen the dollar weaken, and we've seen gold strengthen. Okay, so that kind of relationship, as I said, between gold and the dollar is hugely important. Okay, and one that you want to effectively keep on top of and recognize. And if we quickly look at the same thing in terms of that dollar strength, we can see it very quickly. I'll just show it very quickly on silver. Gosh, silver did very much the same. I'm going to just focus on silver on the weekly chart. Okay, was that once again we'd had a strong uptrend towards the end of last year. It ended with this big bearish engulfing key reversal candle. Exactly at the same time as we saw it on the dollars, we saw it on gold. And then what we were in a position to do is recognize that, as I said, through most of February, we had a really nice downtrend on the daily chart with pullbacks there, okay, that are finished by, engulfing patterns, okay, key reversal patterns. And in particular, we go down to that 4-hour chart, okay, we put in a big bearish engulfing key reversal. And then I said, for most of the month, we went down, and as we pulled back, okay, you'll see very often that pullback to the 20 ended with either a pin bar or an engulfing candle or an inside bar or a key reversal or a star formation, the kind of simple price action elements that we're looking at. Remember, we're just saying in those very simple steps, okay, if there is a trend, we want to, in a downtrend, we want to look to be a seller at resistance. When price rallies up to resistance and it starts to print some of those price action candlesticks, as I said, things like pin bars, engulfing candles, key reversal candles, star formations, inside bars, okay, false breakouts, they are all the opportunity to take a trade in line with the trend. And the same was very much with palladium as well. Okay, palladium on the weekly chart, we ran our way down. We were in a very nice strong downtrend, okay, that we saw, that also, as I said, as we saw a bit of dollar strength, we also saw that added to that palladium weakness, and palladium is in a trend. Okay, remember what I was saying, a good trend leaps off the chart. You don't need to force it. And what we're looking for, as I said, is that we're looking for places where we can do our business, in terms of, here we go, the price is in a downtrend. When it pulls back, okay, pulls back, and what it puts in, it puts pin bars, okay, every time it pulls back to either the moving averages, okay, or just as part of its move as it moves on its zigzag on its way down. That's what we're looking for. Okay, if there is a trend, okay, we want to be selling at resistance when we get those price action, okay, candlesticks there. We've covered them all in lots of the previous sessions. Do that, have a look at them, watch them, start to utilize that, because you just utilize a confluence of events, just utilizing 3-4 things coming together at one time and place that allow the opportunity to trade with the trend. All right, and that was palladium last week, okay, in the 4-hour chart, having pulled back to the moving average. What we saw was with lots of rejection candles with a bearish engulfing before we dropped off towards the end of the week there. So unfortunately, we've kind of run out of time there, ladies and gentlemen. I appreciate time flies when we're having fun. I've overrun a little bit. I do apply. I'd love to be able to sit and chat there more about the price action there. But the message I want you to take away is that there are some fantastic commodities products that you can trade, and that the price action that we've talked about in this trading guide, okay, and having the simple routines and simple plans works as effectively on commodities as it does on FX, on indices, on equities, okay, on fixed income, on crypto. Right, good price action will always show its way up, and if you're just following that routine, okay, of opening a chart, drawing in those levels of support and resistance, identifying if there is a trend, we want to be basically looking. Step 3 is looking to see how price reacts at those levels of support resistance, because we want opportunities to buy at support or sell at resistance in a down trend. We're looking for price action triggers, okay, things like pin bars, key reversals, engulfing candles, inside bars, star formations, false breakouts, and also just being aware, is it part of a bigger chart pattern? Maybe it's a double top, maybe it's a triple bottom, maybe it's a flag pattern in a trend. start putting all those elements together and get it into a routine and practice doing it, well, then it gives you an opportunity, as I say, to not only just trade FX and indices markets, but also commodities and other markets once you recognize how to utilize price action to help you build a plan and execute that plan in trading those markets. So I hope you found that useful, ladies and gentlemen. I hope that's given you just a little bit of insight into price action and how it plays out in commodities markets. As always, I wish you the very best of success in your own trading endeavors, ladies and gentlemen. And I look forward to speaking to you soon. Trade well, everybody, and I'll see you soon. Take care.